Hello, everyone. Welcome and thank you for joining our webinar today. I am Khushbu from MyTime Equity, and we are happy to have you with us today. In today's webinar, along with Sudhir Pai, we have with us Anup Naik from MyTime Equity. Before we start with the webinar, I would like to take this opportunity to introduce you to MyTime Equity and Sudhir Pai. As an actively managed portfolio management and RIA firm, MyTime Equity takes pride in being your dedicated partner on this financial adventure. Sudhir Pai is the founding principal and serves as a fiduciary investment advisor representative for the firm. Before I hand over to Sudhir, let me take you through the disclosure slides that our attendees mandate that we show prior to every webinar. If you have any questions during the webinar, please type them into the question box and we will address them during the question and answer session. If you need Sudhir's help, please write to wealth@mytimeequity.com or you can call us at 972-330-2771. Over to you, Sudhir.
Thank you, Khushbu. Can you hear me well?
Yes, we can. Thank you.
Okay, wonderful. Very good morning to all the listeners out there. Thanks for joining. So we are here today to talk about the market update, the week ending May 23rd, 2025. So we had a choppy market given some of the tweets that we saw from President Trump, as well as the the report that we got from on the debt last week. That caused a little bit of choppiness in the market this week, primarily because of the tweet that came from President Trump about the negotiation with the European Union and to impose 50% tariff. That really took the market by a surprise and brought the uncertainty that the tariffs had created post the Liberation Day. To some extent it's back. So we did see the market pull back to the 200-day moving average, which means the market went through some amount of correction there, but then immediately we saw the market come back. So the momentum is intact. Long term, we don't feel threatened. And next week we have some news from FOMC as well as the core PCE and all that news coming. So let's see how the week goes. Next week goes. This week is so far not that great. The Bitcoin and gold were really good. Bitcoin we saw was up at 4.8%, touched 109K and then scaled back a little bit on Friday. And gold really has gained very well, around 5.6% for the week. And Nasdaq and S&P 500 down by 2.5% each. And then the other news about earnings, we have Nvidia announcing its earnings on Wednesday, which may prove a catalyst for the market to begin its uptrend again. But otherwise, we may see a sideward movement on Tuesday, because Monday is a holiday for Memorial Day. Tuesday, I am hoping that market will be on sideward movement, and then on Wednesday, Nvidia result hopefully should be good, and we should see the upside to start again. So that's where we are on the week, and my predictions for next week. Next slide, Khushbu. Okay, so one other catalyst that we may see for the markets to kind of pick up, as well as the crypto market to pick up, is the Big Beautiful Bill. So this Big Beautiful Bill is nothing but an extension of Tax Cuts and Jobs Act, which President Donald Trump signed off in 2017. And the new bill, which is nothing but an extension of that, plus a lot more tax cuts, particularly focusing on Medicaid reforms and other things, which I'll cover in the next slide. So this is a big thing right now that is going on, and there is a lot of discussions, a lot of difference of opinions, particularly about the SALT, the state and local tax. So that's where a little bit of resistance is coming even from the Republicans, because the states like New Jersey, New York, and California, which charge heavy state tax, they want a higher number for deduction, and this happened in 2017 as well. But there is a little bit of disagreements on that. The Democrats and the senators of those three states, want higher deduction for state tax from federal tax. But I think it'll all go through well, and finally we will see this big beautiful bill get approved, paving way for larger tax cuts for individuals and businesses. So some of the changes that are proposed, in this bill is the extension of 2017 tax cuts. So the 2017 tax cuts, if not extended, will expire this year. So though all the changes, particularly the bonus depreciation on equipments, vehicles, real estate, and all that, that is currently at around 40%. If the approval happens, which hopefully should happen, we should see all the depreciation, bonus depreciation, accelerated depreciation for all the businesses, real estate, and vehicles to go back up to 100%. Not only that, this tax law is going to take place effective January 1st, 2025, which means for the entire year, we will be able to gain the benefit of bonus depreciation. So, we are in the business of real estate. We are in the business of helping, small business owners lower their taxes. So this is going to be a big one. And that is where I think, each one of you must really focus on how do you take advantage of these changes for 2025 and lower your tax, as well as take advantage of the higher interest rate, which has kept the real estate market down from the last 2 years. So we will talk more about some of the opportunities we have, at My Time Equity. And the other changes from this bill is also the qualified tax opportunity zone. Even that is getting extended to 2033. So we'll talk more about that in the coming slides. The standard deduction, which is a deduction that individuals take as a standard, even in case they don't have any expenses to write off, itemized expenses to write off. So that standard deduction will be doubled, for 2025 onwards. Child tax credit, that's going to be enhanced. So sales and state and local tax, that's going to be increased. That discussion is going on. Small businesses can deduct up to 23% of their qualified business income. It used to be 20%. So that's an additional 3% benefit to lower, from your tax return. So you get 3% more. And for tips and overtime, they are trying to exempt that from federal tax. So that's a huge benefit, particularly, to keep the mandate from the elections that Donald Trump offered to that industry, the hospitality industry, and those who voted for him, overtime workers, as well as hospitality workers, who earn tips and additional money from overtime, that will be completely exempted, if this bill gets passed. And then bonus depreciation I already talked about. Then Medicaid and SNAP work requirements, more connected to the Medicaid related stuff. And yeah, so this all of this is going to generate a lot of benefit for individuals as well as businesses, and that's also going to increase our fiscal deficit. So let's go to the next slide, Khushbu. So this slide shows, how much of further losses we will have if this bill gets approved. So there is a $2.7 trillion deficit because of these tax law changes. So on the left hand side, you see, all the increases, and on the right hand side you see all the decreases to the budget, to the fiscal deficit. So you will see that, if this bill gets passed, there is additional $2.7 trillion deficit. So what this means is, this means, our deficits are only increasing, which means debt ceiling will have to be raised, which means, more money has to be printed or quantitative easing to be resorted. With all of these, usually the prices of commodities go up. Things like gold, Bitcoin, and other crypto assets, tend to increase in price. And that's what we saw this week. Gold and Bitcoin was both up by more than 4%. So I think that the trend is going to continue because of all these deficits that US will continue to have. So, $2.18 trillion will be the cost of extending the tax cuts. Raising standard deduction for individuals will cost around $1.31 trillion. And the limits on alternative minimum tax is going to add $1.4 trillion. And the pass-through deductions for small businesses and child tax credits will add another $1.6 trillion. And on the right side, you will see what is going to benefit the budget. So removing personal and dependent exemption, that's one of the big things, because they are increasing the standard deductions. Removing personal and dependent exemptions is going to add $1.87 trillion, which will help the budget. But overall, after all of this, you are looking at about $2.7 trillion being added to the deficit. So not a great thing, but helps the the citizens of the country, small businesses of the country, which are the backbone. So all of this is going to certainly give a lot of impetus, lot of progress to all the small businesses. This coupled with interest rate cuts, is certainly going to help small businesses do well. So small businesses as well as all the S&P 500 companies are going to see huge benefits from this tax bill. So don't lose hope about the equity market when it falls. Be very positive. There is a generational shift. There is so much of technology changes that are happening. So be very positive for 2025. We are super bullish about 2025. We saw a big correction. We saw almost bear market correction, after the Liberation Day in April. But the way it kind of recovered, that clearly tells that this market is not stopping going higher. Now, when can it stop? Nobody has a crystal ball, but my prediction is we may see a bigger correction happen in 2026 onwards, because all of the impact of AI, the job cuts, job losses, inflation related, tariff related inflation increase. I think all of that is going to hit us in either the last quarter of the year or the first quarter of next year and onwards. And we should see, those kind of impact on our stock markets as well as on our businesses, and there might be a little bit of a challenge in 2026 or 2027. So let's see. For now, everything is positive. Trend is positive. Good news is coming. Nvidia hopefully gives great guidance, which I'm very confident that it will. The numbers of 2025 quarter one may not be that great because they did face a lot of business related issues because of all the news and all the tariff between China and US. But for second half of the year, I think they are going to give an extremely good guidance, and the markets will pop. By the way, please don't take this as something that you should use for buying new stocks. Stocks are already at an elevated level, so you have to be very careful when you make new investments. So if you are looking at getting in this market, you have new money, please talk to us and we can tell you how to enter the market. Initially, maybe by putting in a little bit of money and then putting in everything at the right time, or maybe taking participation in structured notes or alternative assets, and then when there is a sideways movement or a correction in the market, that's the right time to put new money in the market. So so be careful and talk to us if you have questions. Okay. Next slide, Kushbu. Okay, so adding to the same points, we are seeing higher tax savings in the top percentile, the ones that earn a lot of money. So the high income bracket is they are going to save a lot of money, but at the same time, the low income and middle income are going to save a lot of money also. And if you look at the projected increase in the national debt, we talked about it, adding a lot of deficit to the budget as well as to the debt. So this is clearly show you that the country is going to put a lot of money back in the pockets of individuals and businesses, which should come back in the stock market, and that should give one more pump to this equity market to push it one notch higher. So not great from the economist point of view, but great from a stock market and the citizens point of view. Next slide. Okay, so we had posted this flyer in our WhatsApp group as well. This is nothing but what I explained just now as to how the new tax law is going to impact all of us. So you can go through this flyer that is posted in our group, in our WhatsApp group. If you don't have a copy of it, you can either take a picture of this now or just send us an email to wealth@mytimeequity.com, and we can send it back to you, and you can save it and go through it whenever you have time. But overall, the changes on the individual tax side and the business tax side is all listed here for you to get a good idea on how this could impact you. Next slide. Okay, for next week, Monday is a holiday, and Friday we are going to see the core PC numbers, which shows the inflation of in the hands of consumers. How the consumers are getting affected by inflation. So I expect this not to be a big deal because inflation is falling. The other big news is going to be the GDP Q1 and jobless claims and the FOMC minutes. Even FOMC minutes, I don't see too many issues there. Powell is again going to speak, but again, he has been little hawkish, not really very positive. So I don't see a huge change coming out of these points, but we have to be very careful about what President Trump tweets. This whole thing about tariff with the European Union is going to be a big one. So we have to see if there is going to be any further deterioration with respect to those tariff discussions, or is there going to be some good news. Based on that, I see the market behaving next week. Next slide. So a quick look at our models. While the S&P for the week, the Nasdaq for the week was down 2.5%. Our models, which you get to see on the right side, the custom models, custom IBKR, Schwab, and the margin models, they were all much better than both the indices. And the reason for that is because we have a big exposure in gold and Bitcoin and international. So if you see on the left hand side, the ETF models, the circled ones, metals and crypto is positive 3.93. Metals and crypto is a model that has gold, silver, Bitcoin, Ethereum, and one other type of metal. We had copper, then platinum, and I don't remember what it is. I think it may only be four. The digital and real gold and silver. That's how I define it. And then international market has been soaring high. So even for the week it did well. So because of the exposure to metals and crypto and international, as well as the model has exposures to next generation, which is all the innovative companies which took a bigger beating than S&P 500 and Nasdaq. Our models performed pretty well. So if next week is very bullish, we should be seeing very good numbers in our models. Our models are very correlated to the equity markets and the commodity markets. So it's a very well diversified portfolio. So if you need help with any of these models, do let us know. Or if you want us to create a model for you with certain specific industries or certain specific countries, nation, like we have the India model, the China model, and the Japan model. So like that, we can create a custom model also for you. So reach out to us and we can help if you need help. Next slide. So about structured notes, we have multiple structured notes this week, and we have few other opportunities to demonstrate and to you as well. So this note is on Meta and United Healthcare. We got this created after a very hard negotiation with multiple banks, and finally we got this from Goldman Sachs. We decided to launch this note on United Healthcare because this stock is down by more than 50%. This coupled with Meta, both are growth stocks. One is in the technology industry and one is in the healthcare industry. This is a 3-year growth note. So investment in this will make you 3x the return of the lowest performing stock. So at the end of 3 years, if you see Meta to have made 100% return and United Healthcare to have made 150% return, so the lowest, which is Meta, multiplied by 3, you will get 300%. So if the lowest happens to be United Health, then you will make multiplied by 3 on that. So a note to take advantage of the down markets that we saw and the very down market that we have seen for United Health. So this is, in my opinion, is an awesome note, very timely, and has a very high return because we are looking at a 3x return at the end of the note period. One other point for those who have joined for the first time to our webinars, all the structured notes are very liquid. So any day if you want to sell them, just let us know and we can get them sold in the private markets. The liquidity availability for structured notes is very high. So selling them should not be a problem. We should be able to sell them. As long as these two stocks are higher than the June 6th price, because this note is getting traded on June 6th. We cannot get more time for this. So this is the maximum time we got. So June 6th is the date. So Anup, this note say on the right hand side 2.85, that needs to be corrected to 3 on in scenario 1. So it's 3x. Initially we had 2.85, but later we negotiated. So
yeah, will do, Sudhir. And then even the investment is also limited. So whoever is interested would need to let us know earlier as well.
That's correct. So,
yeah.
So because of the volatility in the market and because of the volatility, especially of United Healthcare, it's very volatile. You know, one day it goes up 7%, next day it falls 5%. But overall, it's down so much. You know, the banks are also not very comfortable giving us a lot of, lot more days as well as a very high amount to invest in this. So today we have a limit of $500,000. We already have $400,000 of commitment. So we have an additional 100K. So if you're interested, please write to us ASAP and we can help you. But please don't be surprised if we say no to you because this note is of such a nature that the banks can easily tell us the limit is reached and they will not be able to give us anything additional. So if you are interested in these two, if you have high conviction in Meta and United Health, please do reach out to us. United Health also has a lot of contracts with the government, Medicare, Medicaid, and all that. Right now there is an investigation which was published in Wall Street Journal. The CEO also left, so a lot of bad news in such a huge company, and a lot of such companies usually come back after some amount of new governance and new processes being brought in. So we are taking a bet. Again, this is not for all your money. Maybe 3% of your net worth is what can go in this note, and it has a downside protection of 50%. That means if both the stocks are down up to 50%, your money is safe. If it goes below 50% is where the problems are, and it's a 3-year note, so we are giving it enough time for both the stocks to perform, and it's liquid, so you can exit out of it anytime. Next slide, Jyoti. Kushbu, sorry. Yeah, so the second note is with the underlying ticker SPXFP, which is a futures based return, and this return has a return of 14.5%. It is getting traded on May 30th, 2025. It's a 5-year note, and there is a protection barrier of 100%. Means this is fully protected. Your principal is protected, and as long as this index is flat or positive, at the end of month 12, you make 14.5%. Otherwise, it goes to the end, and then your principal is protected on the upside. You make 1.5 times. So a lot of our clients invested in this note because we also had this note put on our WhatsApp group and also in the previous webinar. This is also from Goldman Sachs. So if you are interested, please talk to us and we can help. Next slide.
So they're adding to that, it gets called every month after 12th month. So, and if they call, then it is 14% divided by 12. So, and it can go all the way up to 59th month.
Yeah.
And at the end of the 5th year is what you get 1.5x. And if for some reason SPX FP is negative, then you get your principal back. Okay, just add it to what you said. Okay, thank you.
Thank you for clarifying. Yeah. So the third note is a note on RTY, which is small cap index, and S&P 500. This note is also trading on May 30th. So you have two notes which are trading on May 30th, which means we don't have a lot of time. And one note which is the United Healthcare and Meta, which is trading on June 6th. So decisions have to be made quickly. The maturity of this note is 13 months, and the return is 12%. And the beauty of this note is, even if the index, both the indexes or one of them, is below, up to 80%, you make your 12%. So that's the beauty of this. And you want to add anything else, Anup, to this? Anup?
No, I think we are good. So yeah.
Okay. So if you have any questions, please post them in the questions box, and we'll take all the questions at the end. It should be in some time from now. Next slide, Khushbu. Okay, so this is the fourth note, which is also May 30th. This is on Apple, Palantir, and Dell. This is issued by Morgan Stanley. It's a 5-year note, and if it gets called in year one, you make 15.5%. But it's a principal protected note if it goes all the way till the end. And at the end, if it goes the lowest of the three, multiplied by 1.25 times. So your upside is 25% on the lowest performing stock, and all the three stocks are S&P 500 stocks. And Apple is down big time, Palantir is up, Dell is down big time. So you see the combination that we bring here, right? One is up and two are down. That is what helps us negotiate with Morgan Stanley for such kind of a principal protection, and 15.5%, which is significantly higher than what you get to see on S&P 500 on an average last 10-year basis. Last 10-year basis, S&P 500 generated 10%. Last 2 years were exceptional years. It doesn't mean to say that every year is such a year. This year, particularly with so much of volatility, we all know that S&P is down right now. It's below 1%. Let us see how it goes. I am very bullish about this year, but still, you never know, right? What tweet can come, what war can happen. The India-Pakistan war, never anticipated it. Suddenly, bombs started going back and forth between the two countries, right? So things can happen, and volatility can increase, and you can take a very hasty decision of selling from the markets, and also markets are at a all-time high, right? The PE of S&P is around 22.5, which is pretty high. But at the same time, there is AI, and there is all of these new things that are going to change the world, with the new golden dome that Donald Trump is talking about putting over the US. So a lot of changes happening, in every aspect of business and technology. So this change can bring a lot of upside even in this year. So my target for S&P 500 this year is 7,000 points. And that is possible, provided we see good earnings coming out quarter to quarter, and good guidance is coming out. But if you see this note, it gives you 100% principal protection. It gives you 15.5%, and these are three best stocks in the stock market as part of S&P 500. And this will also give you some access to multiple banks, right? In first two are where Goldman Sachs, this is Morgan Stanley, the other one was Barclays. So we have multiple banks, we are multiple stocks, multiple indexes. So even if you put $25,000 in each of this note, you are super diversified, across multiple stocks, multiple indexes, multiple banks, and multiple types, and also multiple downside protections, upside caps. So that is how it works. Yeah, next slide. Okay, so we talked about real estate, and here is a beautiful opportunity, which is a real estate opportunity. This is a student housing, or also like multi-family, townhomes. You can also call it apartment complexes, because there are multiple homes in this one community. So the cap rate, the entry cap rate, which is like solid, in today's market, you can't get anything for more than 5% cap rate. This one we are able to negotiate for 7.4%. And the returns, if you hold the property for 6 years, is going to be huge, because we are buying at such a high cap rate, 7.4%. And when we sell it, if we sell it for, let's say, 6 cap or 5 cap, this will generate a huge return. And this project is also eligible for bonus depreciation. So investment in this will generate a huge tax write-off. And the income coming out of this is also going to be very tax efficient because of the depreciation that is coming out of this building. So its total price is $15.3 million, and the cash down is about $6 million, and the total income that we are going to earn is close to about $1.1 million. And we are able to negotiate a bank interest of about 6%, and 60 to 70% loan can be made available for this. It's totally about 82 units, and since it is student housing, we have about 328 beds. So you can invest in this through your IRAs, 401ks, and this is also 1031 eligible. If any one of you have a huge 1031, like I recently talked to a few clients who have $1 million plus sale coming up in the next few days, $10 million sale coming up in few days. So we are also showing this building to them. So I don't think this building will remain available for a long time. We should be closing this property in another 2 months from now. So if you're interested, please write to us, wealth at MyTime Equity or ir@mytimeequitype.com, or just email us, and then we can talk to you about this. Now the minimums for this is kept at $100,000. So it is high because we don't want too many investors, because we have a couple of large investors. So the money that we need for this is about $6 million. So we have, as I said, 2-3 investors who may take a bigger chunk of this. And personally, the partners of MyTime Equity and Sumamonde are also participating in this project. But I wanted to show you this here, because with the new big beautiful bill, bonus depreciation, 100% write-off, this building is going to get the benefit of that. Okay, next slide. So we have a qualified tax opportunity zone fund. It is called as MyTime Equity Qualified Tax Opportunity Zone Fund. Now the Qualified Tax Opportunity Zone Fund, the benefits that you get from this is, if you have a capital gain in 2025, you will be able to defer that up to 2033. The new tax law which is being proposed will be pushing that date of 2026 to 2033. So you'll get a lot of time. Plus, you will not pay any taxes on the growth of your investment. That's the huge benefit. Now, our fund has this one property, which is a historic building. It's called as the Scanlan building in downtown Houston. It's a historic building, because of which we are going to get historic tax credit, which is about 40% of our investment. And this will be received after the construction is done. So this is an office building currently. If you see, the building is a very old building, 1909, but it is completely getting renovated from the inside. From the outside, we cannot touch it because it's a historic building. There's a beautiful mural on it. So Google for Scanlan building and you will be able to see. This is a very, very historic building, because this is presented to the governor of Texas in 1900s. It has about 140 rooms, and we are converting this office building to a Hilton Canopy hotel, a very high-end hotel from Hilton, which is called the Canopy brand. And in front of this is the metro station. So beautiful location in downtown Houston. It is in an opportunity zone fund, and because it is an opportunity zone asset, which means you can get the benefit for your capital gains, as well as the building is going to be renovated to a hotel, which means the cash flows coming out of this, once the hotel is completed, will be huge. And before the hotel is completed, because it's a historic tax building, the IRS and the state both put together, we should be getting about 40% of our investment back. So 3 beautiful benefits. You will not find this kind of a building that easily, which has multiple benefits all lumped into one. You know, so again, we don't have a lot of equity left in this property because we purchased this property in November 2024 for $9 million. You know, it was at $11 million. We negotiated it down to 9, and now all the construction and all of that will take place. It will take about 3 years for all of that to be completed, and after that the hotel will be completely in business. And once the hotel is in business, we'll return about $40 to $50 back to you from the tax credits, and after that the income will flow. At the end of 10 years, we'll sell the property and return all the returns back to you. So the overall return, we are targeting it to be about 2.7 times. So if you invest $100,000, you're looking at making about $270,000 by end of 10th year. So this is a 10-year hold. Okay, so this is one more thing I wanted to share, because the big beautiful bill is going to renew the opportunity zone guidelines, plus also put in a lot more benefits, such as you know, taking it all the way up to 2033 and keeping it tax free all the way up to 2050. So next slide, Shushbu. Okay, so we are in almost end of May right now. Everybody is talking to us about tax planning. You know, so we talked about you know, 2 tax opportunities in real estate. This is the third one. Now, for my clients who are living in a state like California, and where husband and wife are both employed, and they cannot take advantage of you know, investing in real estate and taking the bonus depreciation because they cannot be treated as the real estate professionals, we have this opportunity, which is short-term rental opportunity, which means we buy properties in Texas and Florida, which can earn a huge return because it has the potential to be an Airbnb property or Verbibo property, VRBO property, you know, so where the returns are going to be much higher than a regular house that you can buy in Plano or Frisco or you know, or Fremont or you know, Santa Clara. So this is an loophole in the tax law, where if you are buying a short-term rental property, short-term rental is defined as a property that is rented for 7 days or less, which works very well with Airbnb. So this property that you see is in Florida, in Santa Rosa, Florida. We are evaluating a lot of properties. So if you are interested, because these properties are not part of a fund, these properties are purchased specially for you. So our business, My Time Equity PE and Sumamonde, you know, is in the business of buying properties just for you. But you have to write a bigger check, like how you would write a check for buying your own property, right? But we will take care of finding a property for you, diligencing it for you, applying for a bank loan, managing the property for you, and selling it when the timing is right. So the complete end-to-end services will be provided by My Time Equity, and these properties in Florida and few ranches in Dallas Fort Worth is available for short-term rentals. The minimum investment that we need in terms of cash flow is about $500,000. But at the same time, there is also a loan. So loan plus cash put together, we can invest in larger properties. So it should be done either by you yourself or with minimal friends. You know, if you are coming with 2 or 3 friends, we can buy such properties with the larger check, because fund investing in short-term rentals will not get you the benefit of a tax write-off. And also, if you want control, right? If you want complete control on the property, or if you want to keep the property forever, or if you want to sell it whenever you feel like selling. So if you want to have control, and if you want to own the full title of the business of the LLC that is owning the property, this is an opportunity for you, right? Most of our you know, sponsors who you get to meet, they all talk to you about, you know, investing only in funds. But at My Time Equity, we are not only bringing to you equities, we are also bringing to you funds, and last but not the least, direct investment opportunities if you can afford to buy them, right? If you have the cash flow to purchase them. And I'm sure a lot of you are interested in such opportunities. That's why we are demonstrating it here. So please talk to us, wealth@mytimeequity.com. Next slide, Kushbu. Okay, I think that brings us to the end of the presentation. You know, we have 20 more minutes to take questions. So if you have questions, please type them in the questions box and we'll try to answer them. There was a lot of grounds covered. So if there are few answers that I may not have specifically in terms of numbers, we can always get on a call and explain to you the complete model related to the real estate projects that I showed you here. Yeah, please go ahead, Anu.
Yeah, thanks, Sudhir, for enlightening us about the market updates and also the various opportunities that we have got, as well as a huge opportunity to as a tax advantage. I think I'm sure it is a very beneficial webinar from that perspective. There are a few questions flowing in. So the first question is about the structured notes. First time here. Can the notes be invested with Fidelity or E-Trade? The answer is the no, but it has to be traded through a Charles Schwab account, and we will help you to open that because we have a tie-up with Charles Schwab. Again, please email us or call us, and one of us will reach out to you to help you to open that Charles Schwab account. In case if you're looking for the 30th note, we have got quite a few notes lined up for 30th, then you might have to act a little bit faster because it takes about 1 or 2 business days for you to open the Charles Schwab account. And in case if you are planning to use any of your retirement funds like old 401k, old IRA, it might take longer, but individual brokerage account can be sooner. So if you are looking for the 30th note, please reach out to us in a day or two. You can write or call us on the number that is provided here. The second question is any updates on India real estate investment opportunity, Sudhir?
Yeah, so we have one opportunity that we have launched. This is a property in south of Bangalore. So it's a villa project. So you will have to invest in the land, and then we will get into construction. So this is in south near Mysore Road. So it is very close to our office, the My Time Equity office in Bangalore. So if you're interested, write to us. But these are all large check project. This is not a fund investment. You have to have cash flow of anywhere between $100,000 to $150,000 minimum, then stand guaranteed to a loan in India. But we can help you with all that. But I'm just setting the expectation here that those projects are not a $25,000 investment projects. These are slightly bigger investments, but very good projects. Building villas in south of Bangalore.
Yeah, thanks, Sudhir, for that. Can the fund based in rupees be used for these investment?
Yes, they can be.
Okay. What are your thoughts on MSTR, STRK, STRF, and Bitcoin? Can you explain how I can evaluate cap rates versus interest rates for the? Sorry, I think that question is not very clear. You might have to elaborate. Are you? I mean, whoever has posted that question, please elaborate. And what exactly your question is. Okay, so please elaborate and you can repost it. Okay, can you explain how I can evaluate cap rate versus interest rate for the opportunity for the student housing? I think the Colorado project, Sudhir, is what is being referred to.
Yeah, can you explain how I can evaluate the cap rate and interest rate?
Rate.
Yeah, so the cap rate is around 7.3, I think, around 7 plus. And the interest rate that we are able to negotiate with the bank right now is 6 plus. So certainly there is a delta between the cap rate that we are able to purchase the property for, and the interest rate from the bank. And that's what creates the opportunity here, right? You don't want to buy a property at 4 cap rate and get a bank loan at 6, which creates a negative 2. So this one we feel is the right opportunity for current market conditions.
Okay. Again, on the same, the student housing, what are the protections available? High interest rates could kill cash flow, and it's old property resale could be a lower due to depreciation. Okay.
Yeah. So this property is not a old property. It is renovated completely, and the interest rate right now is around 6. But the cap rate at the 98% occupancy that we are seeing, because this is student housing, right? This property It's like a townhouse, multifamily, multi-student, 80 units. So these properties are in high demand because it's very close to the university, and it has been like this for a long period of time. Now this market is not like the DFW market or the California market or the Austin market. This market is a very, very stable market because students studying in these universities are not leaving the university. COVID was an exception, but otherwise the student housing assets are extremely extremely good in terms of their cash flows and their overall performance. So yeah, we can help you with projections. You can send us an email and we can get on a Zoom call and explain you the pro forma and all that. And we may also do a separate webinar just for this project once we finalize whether this project is for a lot of investors like a syndication, or is it going to be offered to just one or maybe two investors because they have a huge 1031 coming up, or maybe the partners of My Time Equity themselves may end up buying this because this project is too good and we personally wanted to buy this, but then because of these 1031 cases that we have been seeing from few of our clients, we thought we'll also put this on today's webinar also to explain the tax bill that is in with the house right now, for approval in terms of bonus depreciation and things.
Thanks, Sudhir. And one more question on the real estate. Somebody has an SD IRA. Can they invest through your through
Yes.
our company for
Yeah. You can invest from self-directed IRA. We have a relationship with Equity Trust as well as Community National Bank, so we can help you roll your money into the self-directed IRA. We can help you with checkbook IRAs. So reach out to us and we'll be able to help.
Thank you. Do you help with India-specific financial matters? I mean, could be on equity investment or selling lands or filing taxes.
That is not one of our core business, but we have our partners. We can help you with connecting them to our CAs in India, and they can help. But on the India side, currently, we are trying to. In July, I'm in India. We are trying to, see whether to launch an RIA in India as well. We don't know, but as of this point, our focus is primarily on the US and one real estate project that we are planning to do in south of Bangalore.
Okay. One other question is on tax. Is the 5% excise tax for remittance confirmed to be effect from this June?
It is not confirmed yet, but it may get approved. Right now it is a bill, so the bill can get approved or rejected. But it's certainly a thought that has come in my heads of the current administration of the US. There has never been such a tax, so I am not sure whether this will get approved, but there is certainly this bill in place. So we are always about educating our community with everything that is happening, which will affect our investor base. So that's why we made a flyer on this and we posted it in in our WhatsApp group.
Okay, thanks, Sudhir. So the next question I'll answer: can Roth IRA be used for structured notes? Answer is yes. Your Roth IRA, traditional IRAs, can definitely be used for the structured notes. But this is, and as Sudhir said, we always believe in diversification. There are other opportunities that we have not spoken in this webinar, like infrastructure funds, and there are private credits, UTMA if you are looking for helping your kids and saving on gift taxes. So for all those instruments or vehicles as well, we can definitely use your retirement funds or your non-retirement funds. Again, please feel free to email us or call us, and then we can definitely sit with you and see what are the various opportunities that we have got. So answer is yes, Roth IRA can be used.
So this question on MSTR and Bitcoin, let me take that question, Anup. So
sure.
MSTR is a stock called MicroStrategy. It's a great company, but they have pivoted completely to holding Bitcoin on their balance sheet and then re-engineering their securities to generate alpha. So I'm of the opinion that Bitcoin and few of the altcoins, which are huge utility coins, are to be kept for a long term. So we have launched our crypto fund, and the timing for that was awesome. We launched it about 2 weeks ago, and we have raised about $1 million in that. We are going very slow in terms of raise, but still, we have about $1 million. So the strategy of the fund is 70% is hedged, to get the returns greater than Bitcoin, and 30% is long-term investment, which is going to be in Bitcoin and 5 other large cap utility coins like Cardano and Solana, and Ethereum. So this fund should be a fund that you should be investing in, because we think this fund is going to do extremely well. I created this fund for myself, but then I launch everything that I do for myself to my clients. So talk to us if you're interested in our crypto fund, or you can also invest in direct ETFs in the equities market. There is news about Solana's ETF getting approved. We have Ethereum and Bitcoin anyways. Uh, but accessing our fund will give you access to a lot more coins, not just Bitcoin and Ethereum. There will be a lot more tokens, very good managers managing few strategies, as well as a buy and hold strategy. And our fund is a very liquid fund. You can get in and get out of this at any point of time. For the first 1 year, there is a hold, so that people don't come into this fund as a short-term investment. But the liquidity in crypto market is 24/7, right? Not unlike the stock exchange, which has holidays and 5 days a week.
Yeah, thanks, Sudhir. The next question is, if I invest in tax saving funds or properties with IRA funds, how does the tax saving work in such cases?
Can you repeat it again?
If I invest in tax saving funds or properties with IRA funds.
Yeah. So there is no problem, just that you will not be getting the tax benefits related to it on your personal tax return. The tax benefits will be going to the IRA, and tax benefits related to real estate will always be upfront depreciation and then recapture when it is sold. So if you're doing it using your regular money, you can lower your taxes for that year. But if it is done through an self-directed IRA, then obviously the benefits will not be reflected on your 1040. But the benefit is there in the project. So that's the answer.
Thanks, Sudhir. One last question, I'll try to answer that you can add. Tax treatment for structured notes. So our growth notes, which is more than 1 year, they are all into long-term capital gain. However, if there are income notes or there are some structured notes with principal protected notes, then they end up in the regular income. So there you can add to that if you have any, but this,
that is perfectly correct. And one other very tax efficient vehicle that we have is the $750 million Ares Infrastructure Fund. So this fund has a 10.8% return, which is paid monthly, right?
yes, Sudhir, monthly.
Paid on a monthly basis. And the 10.8% that they pay is not taxed. When they return the money back to you, and this is a very liquid fund, you can get in, get out of it anytime, but you have to give them 3 months, you have to fill the 3 months redemption form to exit out of it. And in the first year, if you exit, there is a small penalty of 2%, but otherwise totally liquid. So, since we started My Time Equity, all the investments that we are trying to bring to you in the form of a fund, is all liquid. Any day you want to exit, you can just fill up the form, submit it to our ops team, and you can exit out of that within 3 months. Structured note is 2 days. Tax treatment is very beneficial. More than a year, long-term capital gain; less than a year, short-term capital gain. And the fund and the properties that we showcase to you, the Columbus student housing, or the Florida short-term rentals, all of this is where you want to own a property yourself. This is not a fund investing, right? We get a lot of clients who are like, we want to own the property, we want to live it for our family, we don't want you to control it. Okay, here is the opportunity for you. So at My Time Equity, we have all the opportunities covered under one roof. So if you want any help whether it is fund investing, equity investing, crypto investing, or direct investing in properties. We are here to help.
Thanks, Sudhir, for summarizing. I think that was the end of the questions. Again, there was one question. What is the name of the fund you just mentioned? Okay, the last fund that was mentioned was the infrastructure fund. This is from a reputed company by name Ares. Again, please write to us or reach out to us. We would definitely be more than happy to give more information. Okay, I think that was a last question, hopefully. Thanks a lot, Sudhir, for explaining, taking your time. And thanks to all our clients for joining over a long weekend. Wishing you all a happy long weekend. Okay, over to you, Kushbu.
Thank you very much. Yeah.
Thank you, Sudhir and Anu. Thank you everyone for joining our webinar. Have a very good weekend.
Thank you. Bye-bye.
Thanks,
Thank
Kushbu.
you. Bye.